Hello guys, today I'm going to explain to you how you enter into a trade. You want to enter into a trade when you've confirmed that the price is actually trading on your level of liquidity. So what I'm expecting is I'm waiting for these markets to trigger my entry on V75-1S. I do not recommend trading synthetic indices. The reason for that is because the leverage is highly not regulated. So if you're doing that, you are risking not just your money but uh you are risking your money in. Okay, this is the example. If you are trading synthetic, know that you are risking your money in an unregulated firm. So from what you see right now, my take profit is most likely going to be somewhere here. You might wonder why I'm doing this. There's confirmation that the market would sell, and that's what is happening right now. Usually I place my risk to reward on 1 to 5. There's usually this. I've never made my setup, I've never placed a setup on any of my videos before, and as you can see, I'm making this video free because it is a struggle to have a working strategy, not to talk of making consistent profit in the forex market. So to whoever is understanding this method of trading, which is the Fibonacci level, is a free information. You can go and research on Google and learn how to trade for yourself. This is based on calculus. Do not think that mathematics is absent to this. No. If you want to understand calculus, if you want to understand forex, you need to learn two major concepts. And first of all, you need to understand limits, or limits and derivatives. And you also want to understand the concept that involves geometry. For example, geometry plays a crucial part in structure and understanding structure. We have different kind of geometrical calculations that involves the Fibonacci. We know the Fibonacci levels is one of the algebraic functions that applies to the geometry of um, sequence. And we also have the fractals, Fibonacci, and you also want to learn about, just learn derivatives and their functions, and also understand um, limits and derivatives. Like I said initially, you also want to understand geometry, which is the limits and derivatives are basically going to be explained on geometry, while the understanding of the market structure, $19 already, how many cents? The understanding of the market structure is majorly on Fibonacci, geometry, statistics. Sorry. So there are three things you want to know about forex: geometry, derivatives, limits and derivatives, and statistics. These information are going to give you a crucial explanation of how the market behaves. it works perfectly fine. And in all market sequence, you don't want to define the market in one direction and define the other in a different direction. It always work out. As you can see, the analysis of understanding this is based on what I understand on calculus. I studied calculus for a very long time, and that was when I was still in my secondary. And the application on forex has been splendid. I won't lie to you guys. So I'm just making out this video to express to you how useful these informations are. This is the first application of what I've learned in school, like mathematics, because mathematics, we learned a lot about mathematics. We took it so critical, and yet we do not see what we can do with it here in Nigeria, especially now that the economy and the challenge of employment is gripping the whole nation. So what we are expecting now is trying to figure out a way to fighting the challenge that involves poverty. You understand? So what I'm trying to express in this video, I just want you to see the concept and how it plays fine to everything you are seeing right now. I'm not going to give you all of the information that actually gave me this consistent framework and profitability. I just only want to make you understand that trading the financial market is possible, that you can make profit from it on a consistent basis only if you understand what you're doing. If you don't understand, you get used to the draw syndrome that makes you want to, that creates a dopamine effect on your memory, that makes you want to gamble with your money on consistent basis. Yes, it is possible you can gamble with forex. Very, very possible, 100%. So how do you get yourself out from forex? Statistics is important. You need to understand how to expose your capital to the risk you are trading. And whenever you are trading on low risk, guess what? Your emotion is totally out of the trade. You are always focused on what you are seeing on the chart, and you always learn what you are seeing there. So you don't want to trade with the mindset of making 50% per month. I'm just giving you that instance. If you don't want to make 50% per month as a losing trader, what is supposed to be your drive? First thing you need to understand is you need to make yourself some time to get away from the impulse that drives you crazy. For example, you've been running a lot of losses and you want to get your money back, and you're trying every means possible to get it back. You feel like there's no hope somewhere else. Yes, there's definitely these impulses do come in when you make take massive losses, and trying to revenge trade would end up with more loss and terrible terrible nightmares. I mean, terrible experiences. So trying to revenge trade is one of the major cause of loss. So if you don't want to find yourself in situations like that, how do you do it? You know how to calculate your risk, you know how to calculate pips. That's why I don't want to recommend deriv to you. They actually are manipulating your mind with this leverage. They don't want you to understand the importance of statistical calculation. They don't want you to understand how much you are risking on any single trade. That's why the leverage are scattered. You can see 0.05 defines a particular risk in one direction, and on another direction, another dimension of currency pair, it's actually a small fraction. So for a newbie, you would eventually lose all your money before you start thinking about your risk exposure. So these are things you want to be aware of before diving into the financial market. And if you're trading, you also want to understand that trading can be obsessive. Take you can take your time and can make you so obsessed um, with being on your device, and it would make you lack focus on other things. So you also want to focus on, first of all, placing priorities on things that are important. First thing is get yourself a job, very important, and focus on your job. You don't want to play with it. First thing you need to understand is that you want to make sure that you make your money. Why am I giving this information out? As a forex trader, I've experienced one of the most traumatizing kind of pain. I don't know how to express this, but definitely it is not a good one. And I know many traders are experiencing the same thing. Yes. But what I came to realize is each time I'm trading the financial market, I always want to have that feeling that I'm making very huge profits. I'm making the dream income, because there's a dream income and there's reality, there is dream income and real income. Dream income is trying to make fast returns, fast and huge earnings within a short period of time. While real income, you want to sit down and calculate yourself, which business do you operate that can give you 100% per day, 100% return on equity per day. Any business that applies to giving you that amount of money per day, you know, is a risky business. So that's the reality of life. You want to understand that you use time to build up. So time builds up. Why you use your time to build up, why your capital, your you use time to build capital or wealth, why you use this same time to learn how to manage the wealth that is being built up. You have to have a budget for an expenditure. These are things that you need to understand. So you need to get yourself a job, you need to get yourself balance. There's need for balance, and you don't want to risk more than 10% of your capital per month on trading. If you do this, you are going to have a different approach to trading. That's how I'm doing it. And guess what? What helped me is using one of these online wallets like OP. I calculated the amount of money I wanted to invest a second time into trading, and what I did was, okay, now I want to get back to trading. I had to fund, not on my live account. So I'm not talking about my trading account. I imagine that this is the money I've already worked out to trade, to make consistent income from the forex market. So I took out the entire capital and I kept it in this wallet, OP to be precise. So what I did was I locked the entire 95%, and I took 5% from that money to trade. I'm going to be able to access that money for a very long time. All throughout the period of time I'll be trading with the 5%. And guess what? I want to achieve that same 5% per month. I mean, that 5% that I took out, I want to achieve that 5%, 100% return on equity. If I'm to deposit it on my forex account, I want to make 100% return on equity, which is very possible with my strategy. So having that in mind, knowing that my capital is safe somewhere, it gives me a kind of psychological awareness and balance to how I should assume my risk. So now I understand how much I'm risking per trade. I made my calculation and I discovered that it works out very well. I dissected it, and guess what? Trading was like I'm trading a demo account. I felt like I was trading a demo account because even the returns were not so significant that impels a kind of emotion, a urge to take more or massive leverage, because I felt like, okay, if I'm to take this massive leverage, I'm going to lose this entire money, and it does not make any sense. Why do I want to lose this money? Rather, I reduced my leverage and I kept this consistency for a while, and I made consistent growth, though it is so slow, but it is consistent growth in profit. So I said, okay, if this is the case, therefore the whole challenge is actually how much I'm putting into the risk I'm taking on every single trade. So when I came to realize that, I was able to put myself in a place that actually gives me a sense of responsibility. I'll use the word, a sense of being responsible for my every action. So what you're seeing right now is not just a mere say. I've done this on several occasions. It repeats itself on a consistent basis, and even if I'm to run at loss, I don't have much to lose. I have so much little. I mean, I have already set my stop loss to be just a fraction, a fifth of the fraction of what I'm willing to get. And in many cases, if I'm to trade this same sequence up to 10 times, I would also achieve success, because every single loss I take will give me a better entry point to the next sequence of this market, and eventually I'll end up in profit. So this thing has been giving me profit for quite a while now, but the profit is significantly insignificant because it is so small that I don't feel like I'm using the time to make as much as I imagined. And guess what? I don't depend on it, because even the money is too small for me to rely on, because my expenses is more than what I would say this I'll call income that comes from trading the financial market. So for those of you who are having psychological challenges, you are not alone. We are actually having this together, but it is recommended that you change your approach to how you identify the market. And if you want to learn more on how you can work on your psychology and make consistent profit on forex, I would like you to also be part of my group on Telegram. I would offer free signals for a week or two to those who are who would comment to this video, and the free signal is going to show you what I'm trying to explain on this video, that this is a working strategy and it consistently works for every pairs. Regardless of your strategy, if you don't have a an enduring mindset, if you don't have patience, you are still not going to make money, because you need to wait for the markets to play out what you are seeing right now before you dive into the trade. And patience is a key that is not available to all. So you need to understand the importance of patience in trading, and you also want to understand the importance of viewing your approach. Your priority needs to be placed right. You don't want to make trading first. If you are a losing trader, you don't want to make it first, because that's what most traders think, and that's why they lose money on the market. So that will be all for now, guys, and see you on my next video. And before doing that, let me just wait for this market to cancel my TP, then we are out of this. And just as you can see right now, we are just 100%, let me say 90% on profits, and boom, we are good. Oh my god, 55, just 53, okay, experiencing pullbacks, 54, $57, so that'll be all for now, guys, and see you on my next video. Like I said,